Thank you, Mayjoy. Today we'll be looking at partnerships between last mile distribution companies and microfinance institutions to reach traditionally underserved customers with beneficial products. I'm Charlotte Taylor. I'm the Communications and Impact Manager at the GDC, and today's session is being co-hosted with Power Africa, who you'll hear from shortly. Okay, let's take a look at the agenda. So after a short scene setting from me, the Power Africa team will say a few words of intro and take us through a new tool that they've developed on microfinance loans. We will then hear directly from two last mile distributors about their experiences of working with MFIs. And lastly, we'll circle back to Power Africa, who will share some insights on behalf of an MFI that they work with in Liberia, who unfortunately was unable to join today. As always, please drop any questions for our speakers into the chat box as we go, and we'll pick them up during the Q&A. Please note as well that the resources and examples discussed will be most relevant for those of you selling off-grid solar products or involved in the off-grid space, but we really hope that the principles will be more broadly applicable and useful. Okay, so who exactly will we be hearing from today? So on the left of your screen, you'll see the Power Africa team. David Raposo will briefly introduce Power Africa and provide a few relevant resources for your consideration. Anna Perkinson from the Power Africa Off-Grid project will then take us through the microfinance loan guide in more detail. And Wilson Idaho will share some insights, as I say, from the MFI work that he's doing. And then on the right-hand side of your screen, you'll see representatives from two GDC members, Hybrid Social Solutions and Empower Ventures. Jim and Paul will be sharing some reflections on how they've partnered with MFIs, what impacts they've seen, and top tips for companies looking to explore these kinds of partnerships. Okay, so why are we here today? Well, obviously consumer affordability is a huge challenge when we're talking about people at the last mile. Because they are on low and often unreliable incomes, they are unable to access products with significant impact potential. Last mile distributors deliberately target difficult markets and last mile customers, meaning that they have had to find ways of enabling their customers to purchase products in a manageable way. Consumer financing not only enables last mile customers to access products they may otherwise not have been able to afford by paying them off in increments, but also enables their financial inclusion and opens the door to further financing for important needs like working capital, school fees, and more. So clearly, consumer financing is an imperative, and as our 2022 State of the Sector report found, 78% of GDC members offer some kind of financing. But this is also the second most commonly cited challenge across our membership after access to finance. This is likely due to the pressure that providing consumer financing puts on companies' working capital requirements, and increasingly the need to provide customers with longer-term loans as more distributors begin to sell higher value products, such as productive use of energy technologies. So most distributors would prefer not to manage consumer financing in-house, and MFIs offer a clear local option to outsource this important business function. MFIs and distributors are strategically aligned. They both focus on last mile customers and each have valuable expertise to contribute to a successful partnership. MFIs are accustomed to lending to low-income consumers and people working in the informal economy. They have deep experience in organising a credit operation, mitigating risk throughout a credit transaction, and managing a portfolio of loans or leases. And on the other hand, distributors have deep linkages with last mile communities and pre-existing distribution networks and sales and marketing channels to leverage. So partnering with an MFI to outsource consumer financing can therefore enable distributors to focus on what they do best: distribution. However, these partnerships are not without challenge due to the relatively small transaction sizes involved, the high risk nature and remoteness of last mile customers, and the fact that MFI's procedures and skill sets are not always well suited to financing physical assets. The good news is that some distributors have been successful in partnering with MFIs, however, two of whom we will be hearing from today. So with that, I'll hand over to David Raposo, Energy Access Advisor at Power Africa, to say a few words.
Thanks for that introduction. And thanks also to the Global Distributors Collective for convening this important discussion on partnerships between MFIs and last mile distributors. So as was indicated, I'm an energy access advisor at Power Africa. And in scrolling through the list of attendees today, I see a lot of familiar names. So I suspect that many of you are familiar with us. But in case you're not, we are a US government-led public-private partnership comprised of more than 150 private businesses, a dozen US government agencies, and development organizations around the world. All of us are joined in the ambition to add 30,000 megawatts of new electricity generation capacity and 60 million new home and business connections by 2030. So I have what I consider to be the privilege of sitting on the Beyond the Grid team, where I'm focused all day, every day on the connections piece of our goal. So that 60 million connections piece of our very ambitious goal. If you've worked with Power Africa in recent years, it's very likely that you've engaged with our technical experts and our transaction advisors on the Power Africa off-grid project, which we sometimes call PAYOP. So PAYOP works with firms just like yours to resolve deployment challenges, engage with investors, including but not limited, certainly, to MFIs, and sometimes to provide access to grant support. So I'd like to certainly thank PAYOP for the critical role that they've played in organizing today's session and for inviting me to be a very small part of it. So it's a privilege, I feel, to be a part of the conversation today and to have the attention of what I consider to be a really great cohort of innovators and change agents. That's all of you. And so to honor that, what I'd like to do is to provide a few resources to all of you, which I hope you will find germane to the conversation at hand today and useful to your business. The first, which I will post a link to in the chat, if you'll just bear with me, is the MFI guide that we will talk to, or rather that Anna will brief you on in just a moment. And so I will let her dive into more detail in the next segment on our MFI guide. The next document that I'll provide a link to is, and thank you for bearing with me, our PAYGO Credit Risk Management Guide. So this is a great primer on the management of asset-backed loans for the PAYGO community, for firms that maybe otherwise haven't engaged with that marketplace. And finally, I will share with you, and thanks again for bearing with me, more of an overview document on PAYGO itself. So the Power Africa PAYGO Guide for Off-Grid Energy Companies is a primer for firms that are experienced with off-grid energy, but perhaps new to the PAYGO model. This is a roadmap for you so that you can fold in the experiences of others who have been down that trail. The last thing that I will put in the chat before I turn the conversation over to Anna is my email address, because I would very much like to be a resource to all of you as you think through these challenges and as you contemplate how Power Africa can help you achieve your goals, because it's very likely that the goals you have in off-grid energy delivery align well with the goals of the Beyond the Grid team and the Power Africa partnership writ large. So thanks again for this opportunity to play a very small role in today's discussion. And now I will turn it over to Anna. Thank you.
Thanks, David, and thanks, Charlotte, for the intros. Just again, for everybody's benefit, I am the cross-cutting team lead on the Power Africa Off-Grid Partnership. So I've worked on access to finance, among other topics that we cover on the cross-cutting side of things. And now I'll share my screen and go through a short presentation on the MFI guide that we have mentioned a few times. Let me just check. Oh, that's not what I wanted to do. Sorry, guys, it takes me just a second to figure out how to get my notes to come up. Okay, there we go. So getting started, this is just basically the contents of the microfinance guide that we produced. So inside the guide, you'll find information on consumer finance models for off-grid solar, main challenges for financing off-grid solar products, good practices for microfinance, information on policies and regulations that exist and affect microfinance, after-sales service, Forex and hedging, risk management for off-grid solar loans, piloting loans, scaling loans, and gender and social inclusion. Why should off-grid solar companies and microfinance institutions partner? There's quite a few benefits that come from partnering off-grid solar companies with MFIs. But by forming partnerships, MFIs and off-grid solar companies are able to leverage their networks to grow their customer pool, which is, a huge benefit to reach bigger markets and that last mile customer. This is great for MFIs that have already large networks of professionals, cooperatives, associations, and small businesses that they work with, that they're then able to market these products to. Another benefit is that PAYGO is not always available to those last mile customers. And so partnering with an MFI allows the off-grid solar company to bring a financing option to these off-grid solar products. Some of the consumer finance models that we do see for off-grid solar products are that MFIs can sell their products directly from their branches and offices and then take a commission on the products are sold. So this actually is very beneficial to the employees of the MFI as it creates an additional income or revenue stream for them. An example of an MFI doing this and actually creating their own business to sell off-grid solar products would be Bright Life in Uganda, as they have done through their MFI that they have with Finca Uganda. They started their own off-grid solar company. So sometimes off-grid solar companies even go a step beyond just selling the products that they partner with the off-grid solar company, and they become their own direct seller of these products. Another benefit is that MFIs can use these branches and loan officers to promote the off-grid solar products and actually increase the sales and the uptake of loans for these products. Some of the main challenges for financing off-grid solar products are unreliable seasonal income that may make payments irregular throughout the year, political issues and policies which vary across the subcontinent, lack of knowledgeable staff leading to staff not endorsing the products they're selling or financing. Costs can be high due to the cost to manage the loans, which involves physical repayment collection, high interest rates, and various other factors that can increase the costs of actually managing these loans. Some good lending practices that MFIs can consider when they're setting up new loan products for off-grid are customer eligibility, meaning how much the customer is actually able to pay back. This shouldn't exceed 45% of their net monthly income. Strategic partnerships like partnering with co-ops and associations can provide market intelligence about what products will be the most popular. An example of this would be an MFI and an off-grid solar company partnering with a farmers association to sell PUE water pumps. Having patience. Products may not always fall off the shelves immediately upon the partnership starting, but with proper training and having a knowledgeable staff team that is selling the products and providing the loans, it gives confidence to the customers, and the customer pool will grow. Another important aspect is gender and social inclusion. It's important for financial products to be tailored to the customer base, including to women and other marginalized groups that may have less opportunity to build credit or understand financial implications. Policies and regulations. So policies and regulations governing MFIs that venture into non-financial activities vary across countries and are also in many cases fairly new or non-existent. One thing to note is that in most cases, MFIs lending for off-grid products is not regulated. What is, slipped through my slides. So what is typically regulated is the type of products that an MFI can sell. So typically the loan itself is not regulated, but if a product is being sold, that may have some regulations on it. An example of a couple of regulations that exist are the West African Economic and Monetary Union. They have a regulation on MFI sales of non-financial products like solar systems, and these sales cannot exceed 10% of the organization's turnover. A couple of other similar product regulations exist on Ghana's Digital Finance Act and Tanzania's MFI Act. After sales service. So after sales service is key to building trust among customers. As such, if an MFI is acting as a sales agent for an off-grid product, it's important that they provide the same level of service that the off-grid solar company provides, or that they have clear plans in place with the off-grid solar company to address any operation and maintenance issues. Foreign exchange and hedging. So currency fluctuation can pose a risk to the financial stability of an MFI. If a country permits an MFI to trade in foreign currency, this is an option. Debt denominated in foreign currencies can be offset by an equal amount of assets denominated in the same currency, insulating the MFI from fluctuations in the exchange rate. So hedging is an option for some MFIs against currency risk. Credit risk management. So as David mentioned previously, we do have this credit risk management tool. I won't go into too many details on it, but there's the link on the page, and David also dropped that into the chat, so that is available. Piloting loans for new products. So in order to de-risk loans for new products, starting small and testing out the product with a pilot project can help refine the product to be more successful when it's launched at scale. This can also improve financial projections, which will allow the MFI and the off-grid solar company to dedicate the correct amount of resources for the product to be scaled up. So on the screen here, you have kind of the list of steps that you can go through to help set up the pilot and get to scale as you do that. Scaling after piloting. So scaling the pilot should begin once the MFI and off-grid solar company have gauged that there is interest in the product. The financing mechanism is working and the products are functioning correctly, and pilot customers are satisfied with their purchase. An uptake of the off-grid products, as the uptake of the off-grid products increases, MFIs can also increase the size of the products they're financing. So while you can also provide more loans to more customers, you can also go from selling small solar lanterns, solar home systems, to financing fridges and water pumps, or even larger solar home systems for small businesses. So this can also result in increased revenue because the loan size is larger, and you're also reaching a larger customer pool. So lastly, on gender and social inclusion, I just wanted to point out that it's important for MFIs and off-grid solar providers to actively address gaps in services and products to equitably provide access to off-grid energy. To address this challenge, MFIs can set up specific gender-based goals. They can provide financial literacy, training to female cooperatives and groups. They can have a gender balanced workforce so that women feel more comfortable purchasing something from another woman. And they can proactively look for ways to remove barriers to women accessing financial services, since women don't always have the same access or capacity to be able to take out a loan from an MFI. So here's the link to the microfinance loan resource that we have put together. Well, I'm sure we'll also share this after the fact, and you can even just Google microfinance loans and Power Africa and it will come up for you. So thank you everybody very much for having me, and back over to whoever the next speaker is.
Thanks very much, Anna. I think David dropped the link into the chat as well, so it's right there for everyone to take a deeper look. Thank you so much. Yeah, so a bit of a change of pace now, and we'll hear from the distributor side of things. So first of all, I'd like to welcome Jim Ayala. Jim is founder and CEO of Hybrid Social Solutions. Over to you, Jim.
Thanks, Charlotte. Hi, guys. Greetings from the Philippines. I really liked one of the words that Anna used earlier. It was patience. We've been working with MFIs over the last 10 years or so. What we found is it takes quite a bit of patience to get the flywheel going. But once, if you keep at it and you really focus on making it work for everyone, I guarantee you can achieve breakthrough momentum. So that's what we've been able to do. I'm happy to share what's happened so far here in the Philippines. Next slide, please. So just a little bit of background about the Philippines, the off-grid solar market. We have a total population of about 115 million people. That's about 25 million people living off-grid. You may or may not know, but the Philippines has 7,645 islands and lots of mountains. And so the terrain is very, very difficult, which is why the grid doesn't reach many of these places. In addition to the fact that 25 million are off-grid, people who are on-grid often do not have power. The Philippines is #1 in disaster rankings in the world of big countries. That means we have lots of typhoons, we've got lots of floods, earthquakes, volcanoes, you name the disaster, we've got it. Which means that there are a lot of power outages. And because most of the rural grids are run by people's cooperatives and supervised by the government, the electricity reliability is very, very spotty. So 25 million completely off-grid and a few million more who are on-grid but with poor power. In terms of the MFI landscape, there are roughly 200 MFIs. Collectively, they have about 10,000 branches and service about 12 million borrowers. So that's a little bit of the landscape in the Philippines. Let me tell you a little bit about hybrid. Our vision is to end energy poverty. We are a for-profit social enterprise last mile distributor. Our current scale, we are deploying about 4,000 solar home systems a month at about $100 on average each. That's $400,000 per month. 80% of our deployments would come through MFIs. To date, we've lit up about 134,000 households. So using the GOGLA metrics, that means that that about 715,000 people have improved energy access. We've generated about 200 million hours of light and charging from the home systems we've deployed. We've saved our clients about $24 million and reduced CO2 by $156,000. So that's a little bit about us. How do we work? Our goal is to build sustainable last mile value chains. So we work with some of the leading technology partners. We go into the villages and do demos. We have solaristas on staff. They have village champions that we call solutionistas that support them. When people are interested in buying, we help them apply for solar loans with our microfinance partners. Once the loans are approved, we then deliver and install the systems. And then we train up the households to make sure that not only will it last, but also that they'll maximize the benefits. And if anything goes wrong, we're able to fix any broken unit within a week of receiving the complaint. So these last mile value chains are in place to about 4,000 villages here in the Philippines. Next slide, please. So how do we work with MFIs? The key is that we have a solar hub. So here in this picture, in the middle, you see a little house. That's our hub. It's in the main town in a remote province. And we then have what we call solaristas who are then assigned to MFI branches. So in this particular place, Northern Samar, we have a partner with about 20 odd branches. You see the branches are the sons in the picture. So every solarista will have about 3 branches. So in terms of our business model, each solarista deploys about 3 units per day at $100 each. So that means with 6 solaristas per hub, a typical hub does about $36,000 in sales. And our margin is such that we earn about $8,000 in profit per month per hub. And we currently have 12 hubs and we'll have 18 hubs by next year. We work with 8 MFIs and cover about 250 branches at the moment. Next slide, please. So what have we learned about working with MFIs? Again, we focus on patience. The way we think about it is we need to get a flywheel going. And to do that, we need to make sure that the 3 major stakeholders, that we're very focused on the key success factors. So of course, the customers, in addition to doing the demos, we need the right payment terms. For example, most of the products, the home systems need at least 12 months. Typically, many MFIs are only giving 6-month solar loans to begin with. So we need to get it to 12 months. Reliability, super critical. So we don't sell the cheaper products. We really do the more reliable ones. We make sure that customers are trained to get the benefits, that they see lots of benefits. We measure 9 benefits and try to promote 9 benefits. And of course, anytime there's a problem, you need the customer service. So if you have all of that going, you get very positive word of mouth. The MFIs, on the other hand, they want to see a program that really adds value to their mission. The MFIs we work with are development oriented, so very much about poverty reduction. They want something that's easy to roll out, not hard for their branches and loan officers to implement. Typically need a margin of about 15 to 20% for their program costs. In addition, of course, there's the interest margin. We're very cognizant of their KPIs, in particular loan repayment rates, and also additional solar loans. Big thing for our partners is they don't want to handle any inventory, so we completely eliminate inventory. They only pay us once we've actually installed the units, so they don't take inventory. Why do they continue to work with us? It's because we generate a lot of impact reports and impact stories so that they can see how the program is really helping their clients. And we also provide a lot of staff recognition. We call the pace setters in deploying units, we call them impact makers, and we show them how they're faring on Gogla metrics. We find that recognition goes a lot further than incentives. And many of the partners at the corporate level are quite wary of incentives because they don't want to mess up, obviously, the incentives of their staff. They demand rapid customer service, at least 1 week to 2 weeks. And anytime they have any problems, they'd like the distributor to be very responsive. We found if we work on all of this, they're happy and they're satisfied and happy to continue the program. On our end, of course, we need an MFI that's committed to us, to our programs and our products, that provide customer access to us and also the trust, that they when they introduce us, they introduce us as a partner that can be trusted. Very critical for us that our Solarista productivity is reaching the 3 units per day, and that we're able to access and enroll a critical mass of branches, typically about 20 branches per solar hub. Next slide, please, Charlotte. So what's the trick to achieving breakthrough momentum? It's really, the idea is that it's a lot of little pushes, and it's not really clear, was it the first push, the 5th push, the 20th push that really got the flywheel going. So it's really about, number 1, remembering that the LMD needs the MFI, but the MFI doesn't need you. They're perfectly happy not doing solar loans. Number 2, tailor the program for their key success factors. Number 3, build commitment and relationships at all levels. We have to work at the board level, management level, regional level, branch level, and loan officer level to make sure that they're actually committed to the programs. Number 4, make sure customers are truly satisfied. We do a lot of work to get the positive word of mouth going. And then in terms of sales productivity, it's really about enabling our guys to generate more prospects, to help them convert prospects into actual sales, and to be able to access more branches. And so there's a lot of coordination with the MFI partners in order to improve our numbers on prospects, conversions, and branches. Number 6, we really need a local solar hub to ensure the end-to-end last mile value chain operation, from demos all the way to customer service and financing and installation in the middle. Number 7, we're always tweaking our programs to make it more efficient, faster, more productive. And finally, standardized branch enrollments. We've already enrolled about 250 branches. We're gonna enroll another 100 branches over the next 12 months or so. So having a standardized branch enrollment, we found is a key to scaling. So at the end of the day, lots of small steps to get the flywheel spinning. But if you're patient, I guarantee you, you'll be able to break through and get that momentum. Thank you very much.
Thank you so much, Jim. Really, really interesting insights, and I think lots to pick up and expand on in the Q&A. But for now, let's move straight to our next speaker. So Paul Namga is Regional Director at Empower Ventures, and he heads up their operations in Cameroon. Over to you, Paul.
Thank you, Charlotte. Hi, everyone. My name is Nemga Paul. I'm the country director of Empower Venture. I'm in charge of our activities in Cameroon, but also in charge of the expansion of the business in the Central Africa region. Right now, we are targeting some interesting markets, some interesting attractive markets like Chad and the Central African Republic. So it's a privilege to me to be part of this panel. I'm also at the same time very excited to share with you the Empower experience and market insights about the off-grid solar business, the MFI partnerships, and the last mile distribution. When we started this business in 2018, we had a clear vision. That is to achieve in the energy sector what the telecommunication companies have already achieved. That is to outgrow the existing technology and enable energy independence for individuals and community by decentralizing the energy access infrastructure. Presented like that, it is clear to everyone that this energy transition requires 3 main pillars. We need power, we need financing, and we need products. However, there should be However, there should be a trick somewhere, because power most of the time is not available in Africa. Financing is expensive, and products are often of low quality, no good fit, or not suitable enough for the needs of the end consumers. Before jumping in-depth into the core of the topic, I think it's very important to talk a little bit about the background to better understand how we came up with the concept of MFI partnering. Not that we are the one who created it, but why actually we've chosen to work essentially with the MFI. Of course, we won't invent the wheel, but when we look at the nomenclature of most of the sub-Saharan African markets, it's obvious that there are 2 emergent business models. Here, I'm talking on a perspective of payment modes. Either you buy cash for your solar equipment, or you go for a pay-go option. And what we came to notice is that the first option, even though it is quite easy to implement, it's not really sustainable in the long term. While the second one is true, it's quite innovative, but most of the time we encounter technical issue, and it also seriously increase the operational cost of distribution. As a matter of for the MFI, because we came to notice that most of the MFI, if not all, are close to the end customers, who is one of the most essential links in the distribution chain. Another argument in favor of this choice lies on the fact that we notice, particularly in Cameroon, that other financial organizations with interesting consumer financing profiles, such like village banks, cooperatives, tontine, are either affiliated or have very tight links with its MFI. Next slide, please. So what is our solution? Our solution is a business-to-business to consumer business model, if I can put it like that. Against this backdrop, we came together about 4 years ago and created, as I just mentioned it, a B2B2C platform in which we offer turnkey solutions to local distributors in Africa to enable them to deploy solar energy to their customers. We thus combine our expertise with the expertise of our local partners. In that regard, we took the decision to set ourselves up as a B2B business partner with local distributor companies. We don't sell, it's very important to emphasize on this point, is that we don't sell directly to the end consumers, because we strongly believe that there are hundreds of good local companies in Cameroon that have the local sales and distribution expertise. You can see on the map all the countries where we are located. We started in Zambia in early 2018. After 9 months, we launched the operation in Cameroon. 6 months later, we did the same thing in Togo. Right now, we are present in 7 countries in Africa with the plan to increase our footprint in existing and new markets, such as Ivory Coast, Nigeria, Mozambique, Senegal, DRC, and so on. What is the business? Let's have a quick look about the business overview. Our offer to our local partner is a platform that is based on providing them with solar systems and productive use appliances. Second, we offer financing, which includes inventory, as well as consumer financing to the end user on a so-called lease-to-own model that is going up to 36 months. Once the end customer paid off, he owns the system. Thirdly, we also offer to them our software and data solution, which digitizes our operation and increases efficient processes. Here, this is our current base product portfolio, and we supply plug-and-play solar products to our partners, to household, to SMEs, but also to farmers. I just want to emphasize a little more on the segment of SMEs. When we talk about SMEs, we show SMEs and off-grid solar products. We should always bear in mind income-generating activities. Here you can see what we offer. Here we have a solar clip that we offer to young entrepreneurs, to young people who want to start their own business. They can open some barber shops in villages. Just at the left, we have a 750 watt solar generator that we provide with a freezer. And you can run businesses like cold store or the sales of frozen products like chicken, like fish. For the household, here we talk essentially of lighting, phone charging, and entertainment. Whereas on the last segment, there is the farmers. There we also have productive appliances like the solar sprayers. We also provide fruit lights for people running business like poultry and the rest. Next slide, please. Our software solution is a key enabler, as we are convinced that in order to scale and maintain control, we really need to digitize our operation and workflows and gather multiple data from the end users. That's why we decided to develop some few years ago our software, in-house led by our CTO in Madrid. It is programmed so that digitizes operations such as logistics, customer relationship management. We track the products from the day the product leaves China until it arrives the end user through a simple process of QR code that we can scan and get all the relevant information. We have also started remotely monitoring the system and getting data points from our hardware and from the customer that in return allow for the data-based decision making. Looking into the future, we also intend to design a platform that allows customers to apply for a loan via their mobile phone. An initial pre-assessment can be carried out remotely without customer having to travel or staff spending long hours filling out the application. Okay, Empower business model is a very simple one. So at the top, we have the Empower. Actually, we do the sourcing, we do the supply of the products. In the middle, our business activities are divided into two main components. On the left, we have the distributions, like with partners like distributors, resellers, corporates, small installers. Whereas on the right hand, we have consumer financing activities, where we can put everything that concerns MFIs, lease companies, financial institutions, and the rest. Next slide. We at Empower, we strongly believe that MFI partnership is the ultimate solution to unlock the key of the tricky issue relating to consumer financing and access to high quality solar products. Interesting thing is that we do not only recruit in the MFI portfolio, but we also create value for their business by offering an innovative financial product. So that is how we came up to design two main categories of mechanism to finance the end consumers. We have the typical MFI partnerships, where the MFI is going to finance the inventory. The process is really simple. There is once the client has applied, Empower confirms the availability, the partner validates, the customer make a down payment, we deliver the system, and now the MFI would then put in process mechanism to recollect the money in installment. On the right, we have another model.
Paul, sorry to jump in. We are running a little bit behind, so I think it might make sense for you to jump to your challenges and tips slide, if that's okay, and then wrap up and we'll move to Q&A.
Okay, sorry, thanks, Charlotte. Okay, so now, one of the main challenges we are facing in the partnership with microfinance is, first of all, the fact that they are very slow in decision makings. One of the other challenge should also be the fact that once a microfinance institution has been onboarded, it's sometimes really difficult to try to convince them to bring a little bit down the interest rates so that the products could be available and easily accessible to the end customers. About the tips, we find some few tips, amongst which we strongly believe that we should keep persisting on pedagogy by trying to inculcate that culture and that value to the MFI. That the solar credit is an innovative financial product, so they should invest in it. We can be proud of what we have been able to achieve so far. Let me just quickly give you some few figures. To date, we have been able to provide about 37,000 solar equipment to people. In 2026, we aim to hit the target of 2.4 million. We have also been able to support about 3,600 SMEs. In 2026, we would like to hit the target of 640,000. In the same regards, we have been able to, in terms of reduction of carbon emissions, 7,900 tons. People who have been financially included are 9,000 right now. In 2026, we intend to reach the target of 390,000. Then in terms of average expenditure saving, right now we have been able to register $2.9 million, and we are targeting to hit the target of $500 million in 2026. So thank you for your attention. And here we have all the contacts and the phone numbers of the key contacts at Empower in case maybe you would like to invest into the company. Thanks.
Brilliant, thank you very much. I can already see a few people mentioning in the chat that they'd like to know more. So if you want to drop your contact details into the chat for people to get in touch, then feel free. Thank you very much to all our speakers. So I noticed that our final speaker unfortunately has not been able to join us. I think they're held up in another call. So let's take this opportunity to jump straight into the Q&A section. Please do, if you've got burning questions, drop them into the chat. But we also had a few very interesting questions that came through as part of the registration process. So let's kick off with those. So an interesting comment from GDC member Bida Sasa, and I don't think Rocio is on the call, but she mentioned when there are too many intermediaries, the client tends to lose out as each intermediary needs to be paid. So this is, I suppose, for Jim and Paul, how do you make sure that your consumers don't end up paying more when there are more stakeholders involved? Would either of you like to address that one?
Sure. We, so first of all, we work with MFIs that are fairly reasonable in terms of their interest rates. So typically 2 to 3% per month. Some of them actually do the program where they're just doing the margin without the interest. But we're very careful to make sure that, what people are paying on a weekly basis is quite a bit better than their alternative. So what we find is that for most of our products, our clients are paying something on the order of about $2.50 per week. So that's $10 a month. But our products typically are saving them or earning them extra about $30 to $40 a month. So it's typically about a 3 to 6 month payback. And so that's what we focus on, is how quick is the payback. And typically the unit pays for itself. Because the moment they have the unit, it pays for the loan and they have money to boot.
Thanks, Jim. I think there was a question directed at you in the chat as well from Vitalite Senegal, which I think you've addressed, but it might just be worth checking that out. Paul, did you want to add anything?
You can go ahead, please.
Okay. Okay, great. So perhaps moving over to Power Africa. So another interesting question that came through from Sunvine Africa. I don't know if Isaac's on the call, but Anna, Ewan, how do you overcome the problem of many MFIs requiring collateral to give a loan? So what can be used other than the product being sold as collateral?
Thanks for the question, Charlotte. So there's a couple of things I think that we can take into account other than just having, hard collateral to do to make the loan viable. So one of the things that we look at are having group loans that are able to put social pressure onto the members if they are unable to pay for the loans that they have. So using the group model is one way to overcome that collateral challenge. So that's really where working with our associations and cooperatives comes into play. Another option, which it's a little bit more complicated, but is always a good way to look at things, are credit guarantees. So if MFIs are able to apply for some of the guarantees that are available through some of the international aid programs and donors, then that's another way to really de-risk the loans and give an incentive to the MFIs to provide that financing stream.
Could I just say that at least with our partners in the Philippines, none of them require any collateral at all, nor down payments. And our repayment rate is over 99%.
Thanks, Jim. Yeah, Paul, did you want to add anything from your side? What's the collateral situation?
Actually, the collection situation depends of the two mechanisms I've just presented. We have been able to design a mechanism with partnering with corporates where we collect back money on a how can I put it, on a payroll deduction basis. That is, the company will bear the risk. We just add a 7% interest on the recommended price of the products. Then we extend the recollection into 6 months. On the other hand, when it is a typical MFI partnership with banks or MFIs, actually we don't have the power to intervene or to influence the transaction because everything lies on the bank's methods and mechanism. So I don't know if I've tried to answer it.
Thank you. No, really appreciate that. Another question, I think for the Power Africa team, but I think you, Jim and Paul, you'll also have insights to share on this. So Julius mentioned, I have observed over the years that MFIs see off-grid solar companies and pay-go companies as competitors. Is this an issue that the Power Africa team have noticed over the years? And if so, how did you overcome it?
Thanks, Charlotte. So I'm going to pass this one over to my colleague, Ewan, to answer.
Yeah, no, thanks. And to be honest, yeah, no, it's not something that I've heard of before, but I think it comes down to kind of building the relationship, you know, and having that kind of, you know, good relationship between the different partners and being kind of transparent. And then, you know, I think as Jim also kind of highlighted on, you know, having kind of patience. I think the big lesson that we've learned is that, yeah, these types of partnerships can be extremely valuable, but they quite often take some time to develop, and often they may start quite slowly. And then it's, you know, having kind of particular maybe ambassadors that really show the kind of example positive benefits to you know, to other staff members. So I think yeah, I haven't not come across that sort of issue of sort of competitiveness myself, but yeah, interested to see what the others have to say.
Yeah, on our end, we haven't done pay-go yet, so it's been a non-issue, but we are considering it, but we'll probably target people who are not members of the MFIs.
Thanks both. Ewan, actually, while you're potentially unmuted, there's another question that came through during registration, actually, from Milestone International School. So have you seen examples of where this model works in politically unstable countries, or are there preconditions for a market for this model to be able to work? Don't know if you want to have a go at that one.
Yeah, no, I think it's an interesting question, and I think my sort of sense of that is that commercial financial institutions, the interest rates and the collateral and other requirements tends to be depending on the level of risk of a country. So if a country is politically unstable, that does often make it a lot more difficult. The interest rates tend to be a lot higher, so then it makes it kind of more difficult, because obviously because of that sort of instability. But I think in quite a few countries like that, I think often community savings groups and maybe less sort of formal lending organizations, I think tend to be a lot more kind of prevalent. So that's my understanding, at least. Thanks.
Thanks, yeah, that's useful. I hope that's answered the question. Back to, I think, Jim and Paul, but again, Power Africa Off-Grid project team, if you want to jump in, please do. So we've got a question from Mohammed. Does the MFI ask for any type of guarantee before you go into a partnership with them? Asking if the customer is unable to pay the MFI.
For us, go ahead, please. Sorry.
Okay, for that I can give a quick answer, because here in Cameroon, what we have been doing is that it's quite easy, because most of the time we go and pick customer into the portfolio of the MFI. So it's quite easy to get to close the deal, because actually these are customers who have been doing business with the MFI for a long time. Now it's much more difficult when the potential customer is not a member or part of that MFI. It's where the MFI need to check about the bank records, about the solvability of the potential customer. So that's how it looks a little bit like here in Cameroon.
On our end in the Philippines, when we enter into an agreement with the MFI, we call it the Solar Access Program. They don't require any guarantees, but the strong understanding is anything goes wrong with the product, you need to fix it. Otherwise, the clients will be upset and then they won't pay the loans. So they're very, very particular about having good customer service. But in general, because the warranty is a 2-year warranty and the loan's a 1-year loan, they're covered by the warranty. So it's really about how quickly can we service any issues. So we typically promise 7 days. We're generally able to achieve about 3 days.
Thanks, Jim. I can see more questions for you in the chat that I think you can probably answer there as well, if you want to take a look. Okay, I think we have just got a couple of minutes left, but one final question for the Power Africa team. This is another one from Julius. Thanks, Julius. Are there any examples of MFIs that have used PayGo technology to secure their loans to ensure good repayments by customers? Anna, you in just 1 minute and then we'll wrap up.
I think from what my understanding is, yeah, I mean the combination of maybe not necessarily the pay as you go technology, but the ability to kind of track the payments, and have that ability to kind of remotely control the system, turn it off if a payment hasn't been made. So I think like having the and actually, I mean, maybe going back to the kind of a previous comment, I mean, I think working with MFIs and local banks and pay as you go, I mean, to me, often it's not one or the other. I think for off-grid solar companies to have, to be able to use both, I think is quite often a good tactic. So it doesn't have to be necessarily one or the other. But I think, I don't know the name, but I think there was a company in Ghana that was being able to kind of access the technology, the ability to control the system, kind of ensure payments was quite useful for them. So yeah, thanks.
Thanks, Ewan. So I realise we are a minute behind. So so much. That was a really brilliant Q&A. I hope that the audience found it just as useful as we did. And apologies that we couldn't get to every single question, but those that we did get to were super interesting. So yeah, thank you so much again to all of our speakers and also to you for taking the time to join us today. I hope this was useful. You should now see a feedback poll on your screen. So please, before you drop off the line, take a moment to just tell us what you thought of the session today and how useful you found it. As always, we will be sharing the resources that were dropped into the chat with you in follow-up, as well as slides and also the webinar recording from today. So please circulate these with relevant stakeholders who you think would find them of interest. And just wanted to flag that our next webinar is going to be on investment readiness tools. And that will be taking place in October, particularly relevant for early stage distribution companies. So please keep an eye out in our upcoming newsletter for that and sign up. And as always, if you've got any feedback or if you'd like to have a chat with us offline, then feel free to drop us a line to gdc@practicalaction.org.uk. Thank you so much again and have a good day.